Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Monero or XMR. So if you guys like the content, please subscribe to the channel and also do give the video a thumbs up, and please check out the Telegram channel in the description below. So if you follow the channel a lot, you know that we have spoken about Monero a couple times, namely in videos on modern portfolio theory and maybe a couple other things. But for the most part, I don't think I've done a standalone video on Monero. And the reason was that, I just didn't feel like the time was right. I feel like there's times to focus on certain coins, and then there's other times to focus on different coins. If you're not familiar with Monero, it is a privacy coin. So of course there are some risks involved, but again, there are a lot of people that think that, something like Monero is essentially what Bitcoin should have been. To have those actual privacy features built into it is certainly a perk from some people's point of view. So I've mentioned before, right, that if you wanted to, if you're trying to develop your portfolio, right, for the market cycle, and you want you want to kind of capture every sector of the market, whether it be like peer-to-peer, store of value, privacy coins, decentralized finance, like smart contract stuff, whatever it may be, privacy coins could be one of them, right? Because privacy coins do seem to play a role in the market. It's essentially like the cash, right? The cash of crypto. So the reason for that is because of fungibility, right? So all the coins are treated equally. There aren't any XMR coins that are tainted or anything like there would be with non-privacy coins. But let's get into the reason why we're doing the video now. The reason is because I look at this, right? I look at the XMR Bitcoin chart, okay? And we've seen this before, right? Where have we seen this before? Well, let's go ahead and open up a new window. And what I'm going to do, and I promise this is not an ADA shill video by any means, but I just want to show you. It looks similar to what we called out for ADA a while ago, right? When ADA was in this region here, we said that it's likely it's in an accumulation range against Bitcoin, and that we would expect at some point to break upwards against Bitcoin, right? I mean, yeah, it's good to break up against USD, but the goal is to break up against Bitcoin, because if you can do better holding Bitcoin than holding XMR, then why hold XMR? So the goal is to do better than Bitcoin. So you want to see it break upwards. And we looked at this and said, okay, well, it seems like XMR might be in a similar type of accumulation phase. Now, the thing is, right, is with ADA, when we identified this accumulation phase, it happened over here, right? I was covering ADA all the way back in 2019. We talked about this accumulation phase. Obviously, we didn't immediately know it was an accumulation phase because, we could have continued on down. But we didn't, and around this point, we said, okay, guys, it looks like that ADA is in an accumulation phase against Bitcoin, and that it's likely going to make a move up. And it did, right? In 2020, it made a move up, but then March came, and it came back down. And then eventually, it did go up, which is what we were waiting for. So make no mistake, we don't know, right, when a breakout could come. This could come back down first, then go back up, and then break out, right? But the thing to realize, in my opinion, is that if we look at the general, say, accumulation phase of XMR and take it to be more or less in this region, it seems like we're nearing the top of it. And you could say that, we've already exited by most people's standards, if you're looking at, say, just this lower region. But the argument is that this is a decent accumulation range for XMR, and it has been, basically for over a year. And this is against Bitcoin. You can see that over the last year, despite the fact that the market has been quite volatile during that time, the XMR Bitcoin ratio has basically just been trading within this window. And currently we're nearing the top of that window, just like ADA did several different times, and then finally we blasted off, right? So we're looking at XMR, and we're saying, okay, we recognize that short-term moves are often, you can often write them off to a random walk or short-term or geometric Brownian motion, okay? So we don't know, right? We don't know if it's about to break out up here or if we're going to come back down and stay within the accumulation range, right? You know, if Bitcoin were to break out tomorrow and go to 14K, then rest assured XMR Bitcoin is probably going to lose value. What you would want to see, in my opinion, what you would want to see is Bitcoin start to just chill out, right? Let it hang out around 12K. And I think, you know, as long as it continues to stay bullish, a lot of coins, right? We've talked about Ethereum. They're probably going to continue doing well. XMR could be one of those ones that's next on the list. And I want to show you something. So if we look at the BLX, one of the things we've spoken about before, right, is the 20-week moving average, okay? Here's the 20-week. We've said that historically speaking, you know, the 20-week is the support during the bull market, right? The 20-week moving average is the support during the bull market, okay? We also noted that Ethereum, so let's go look at Ethereum. So let's look at Ethereum USD. And if you go back to the last cycle, actually I should probably switch over to a chart that goes back further. So if we look at Ethereum, let me just find one that goes back a little bit further. I guess I can go to Kraken here. So if you go back to 2015, we know that Bitcoin got above the 20-week moving average, right? It got above it in October of 2015, okay? And after it had been above the 20-week, for approximately 100 days or so. It was basically when it held the 20-week moving average as support in February. So in the first quarter of 2016, this is when Ethereum took off, okay? And then it moved sideways for a while, and then it went down, and then it moved again when Bitcoin got to its previous all-time high. Now, the reason why I haven't spoken much about Monero is because it's more of a strategic thing, right? And by the way, if you follow the private channel, if you're on the premium list, you've seen this, right? We've already been talking about Monero, and we're speaking a few days ago about this accumulation range, back when it was $93. So now we say, okay, well, Ethereum's probably going to continue doing well as long as Bitcoin stays bullish. But if we take a measured move, right, from the time that Bitcoin, we know that Bitcoin was above the 20-week starting in October of 2015, okay? Starting in October, I didn't draw this right. Starting in October of 2015, it took about 100 days before Ethereum took off. Now, if we go to XMR, and let's go all the way back to 2016, you can see it did have a move early on, right? But it wasn't as substantial of a move, right? I mean, XMR had an absolutely amazing 2016, right? I mean, absolutely amazing. But what's more important is to compare it to see how it was performing against Bitcoin during this time, right? This is what's important. So if you look back at Bitcoin during XMR Bitcoin during 2016, you can see that it had a pump around the same time that Ethereum did, right? I mean, it went up, if we go from the bottom here, whoops. So if we take a measured move from, you know, the bottom, somewhere around here, up to the top, it went up 250%. So we may expect a move from XMR because of this. But what's more important, in my opinion, is this move. So it was this move here. And this move was 1,269%. When did this move come? Well, it came, if you go back to when Bitcoin got above the 20-week in October, it took it approximately 231 days. So during the second half of 2016, right, coins like Ethereum and a lot of other coins were not really doing a whole lot. But XMR was kind of doing its own thing. And again, we know that past performance does not mean anything with regards to future results. We understand that. But what I say is, like, my argument is we can at least use past data to inform future decisions. This is not financial advice. It could be that XMR does nothing like it did in the past. But we've made these same projections for Ethereum, for Cardano. We looked at it data science or we looked at Link in the realm of data science. And we were able to, accurately say that, okay, these are likely going to break out, and they did. Now the question is, okay, is it XMR's turn? So if we were to see a move, so let's say this one was approximately 230 days after the 20-week moving average was broken, okay, and then subsequently held as support later. So first of all, let's go to present day, okay? Let me go ahead and remove this. We know that the 20-week moving average of Bitcoin was broken approximately April 20th or so of 2020, okay? So far, we're approximately 119 days out. So it could be, right, that we sit in the accumulation phase for another 4 months and then break out. This is possible. It's also possible that we don't and that we break out sooner. And if you look at the XMR ratio, it also had a nice breakout in February of 2016. If you go back and look at Ethereum, its breakout happened a little bit earlier. It happened in January of 2016. So Ethereum, it was the front runner of the market. It was kind of pulling the rest of the market up. And then about a month or two later, XMR started making move. Monero started making move. And then once the Monero move started, right, in February of 2016 in USD, once it started, it went up, 101,000%. So it went from, 47 cents to 460 bucks or something over the course of 686 days. So this was a substantial move. And we look at this on the USD chart and say, well, in the same way that it looks like an accumulation phase against Bitcoin, well, it also looks like it's a fairly decent accumulation phase against USD, right? This long accumulation phase where it's gone as low as $40 and as high as 120, and then back down to 40, and then back up to 96, and then back down to 40, and then back up to 100. So the question, right, is it going to break out now? And, guys, I can't tell you, right? I can't tell you if it's immediately about to break out or not. What I can say is that if you look at the last market cycle and look at its trend against Bitcoin and just, observe that it was in a similar, you can see this is against USD, so you can see a move down, and then an accumulation phase, right? And then we went up, and then a move down, and then an accumulation phase. And if you're good with patterns, try to figure out what comes next. So it's just a matter, in my opinion, it's more a matter of how long will the accumulation phase last. Now, you have to remember, right, that if Bitcoin kicks the bucket, then, all bets are off in the short term in terms of XMR and Bitcoin. Like if Bitcoin crashes back to the 200-week moving average, then most likely XMR is going to crash harder than Bitcoin crashes. So a lot of this is contingent, right, on Bitcoin staying bullish and staying above its 20-week moving average, right? So staying above its 20-week, like it did last cycle. And you can see that Bitcoin is currently well above its 20-week moving average. If you take a measured move from the 20-week up to where we currently are, it's approximately 25%. And if you draw it the other way, from where we currently are, down to the 20-week, you can see, this is a 20% drop, right? A 20% drop would take us to the 20-week. If it holds as support, the market is likely to stay bullish, right? It just kind of regroup and continue on. If it drops below it, then you probably would want to consolidate, right? Not financial advice. This is what I would do. I would consolidate a lot of my positions out of altcoins and into either Bitcoin or stablecoins. So now, right, the strategy is finding coins, right, that are in these key accumulation phases that have proven themselves, historically speaking, and that have a role to play in the next market cycle. And I think that privacy coins do. It really does. I think that having like a portfolio where you say you partition it off into various sectors, right? Of course, you have your Bitcoin, and then you have your things that are the backbone of like the smart contract stuff, the peer-to-peer stuff if you want to, privacy coins, decentralized finance, whatever it is. It's okay to have different portfolios because diversification is a good thing. Of course, there are risks associated with privacy coins. In fact, some of them have been delisted from some exchanges. because of the privacy features, I think. But anyways, I digress a little bit there. So what we're looking for is we're looking for Bitcoin to stay bullish, and that means staying above its 20-week moving average, and to see XMR Bitcoin break out of this region and come up, right, to the next one. And I would argue that the next one, is approximately up here, right? So if it were to do that, right, and it could come back down in the short term and then go up, right? But let's suppose that it goes up. However it gets there it doesn't really matter, but let's suppose that it does go up at some point, and we say, okay, well, the ratio is 0.01, okay? Or, 0.012, and somewhere around there. Then this means, you can do the math, then we're essentially, the price is essentially going up from the current level about 42%. Okay, so a 42% move. XMR is basically at $100. This would put it at 142. Now, if it goes up to say all the way up here, which is kind of like the top part of this secondary accumulation range potentially, then we're looking at a potential 70% move up. So we're getting into the realm of breaking out from $100 XMR to closer to like a $175 to $200 XMR, if of course we can break up here, and if Bitcoin stays the same value. Now, if XMR is finds a way to make this move to this level, and it goes up 70% against Bitcoin, but if Bitcoin's at 14K or 15K, then XMR is likely at a higher USD valuation, because if it's a ratio of Bitcoin and Bitcoin's higher, stoichiometry would tell you that then the USD value of XMR is higher. So it's all about a matter of Bitcoin staying bullish, and for the same trend that has been playing out across crypto and has been playing out historically for XMR to essentially just play out again. Now, one of the things we've spoken about is modern portfolio theory, okay? And we've spoken about this before. I made a video about this, but I just want to reiterate, if you're unfamiliar with it, this is what a lot of people use in traditional finance, right? To identify portfolios that meet their risk-adjusted returns. And so what we're plotting here is the expected return based on historical returns and the historical volatility or risk based on historical volatility. So this means that, in a year, if this is your portfolio and you pick one, let's say here, your expected return would be 80% plus or minus 70%. And so that would mean it would go between, your expected return would be between 10% and 150% with a probability of 68%, which is one standard deviation. And I get it, it's a large range, but it's crypto. What do you expect? Now the funny thing, right, is if you run this, and I ran it on a lot of coins, if you run it and you go back to say 2015, if you ran it on say Bitcoin, Ethereum, XMR, and Litecoin, well, so I first ran it with just a few maybe 1,000 different points, and we did 10,000, 100,000, and 1,000,000. This is the efficient frontier, and you can actually, instead of brute forcing it with Monte Carlo, I also just solved it with a least squares method, and it turns out that for risk-adjusted returns, right, and this is not what Ben thinks, this is what the data says. This is the beauty of it, right? It's not what I think, it's just what the data says. In terms of your maximizing your Sharpe ratio, right, in terms of maximizing the Sharpe ratio, which is your risk-adjusted returns, so it's color-coded by the Sharpe ratio, you want it to be a higher number. That Sharpe ratio exists on the efficient frontier because the efficient frontier is out here. So the efficient frontier means that for a given volatility or risk level, there exists a single portfolio weighting that maximizes your risk-adjusted returns and sits out here on the efficient frontier, and then below this point is kind of like the inefficient frontier, because if you have a volatility of 90% and your expected return is 50%, like, what are you doing? Wouldn't you rather have a volatility of 90% and an expected return of 100%? And of course, it's based on historical returns rather than a projected return, right? But we could always load in projected returns later. But the point is when you run this and you solve it, it turns out that it was, in order to maximize your risk-adjusted returns with these 4 coins as the possible contenders. And the reason we're not choosing a lot of coins from 2017, right, is we need data. In order to do this, you need data. So I picked 4 coins that have a lot of data. You can see that to maximize it, it was 48% Bitcoin, 35% Ethereum, and 17% Monero. And the reason, we know that Monero had a pretty bad bear market, but it had such a great bull market, which is what gives it its 17% weighting in this portfolio. So I want to remind you that, before I wrap the video up, if you guys like the content, please check out the premium list at intothetecryptoverse.com. We go through a lot of this exclusive stuff. You get access to a alerts channel, which, I did talk about Monero a few days ago before the 10% move. Again, it's more of a short-term random walk. I'm not really going to take credit for that. What we want to see, right, is for Monero to go up 2x, right? And not just 2x against USD, hopefully like maybe 70% up against Bitcoin. This is what we want to see. Anything that happens in the short term is more or less a random walk. We want to see the macro shift move up. And we talked about that on the alerts channel. So with the premium list, you get access to the private alerts channel, the private chat room, the weekly premium video, the weekly premium report, the Google Sheets risk dashboard, which includes Monero, by the way, and it's been on there for a long time, or a few weeks, not a long time, a few weeks, and a strategy dashboard, which helps you to visualize dynamically DCAing out of the market based on the risk levels. And then, we have it for Bitcoin and Ethereum. Maybe I'll add Monero soon if there's enough interest. But let me know what you guys think. You can pay with crypto if you prefer for 6 or 12 months and get a discount. And you get a 15% discount for 12 months. And then also I will remind you that the prices are going to be going up here either this month or next month. And if you want to get grandfathered in at the lower price, then go ahead and sign up. So to wrap up, right, let me just, to wrap it up really quick, we know that Monero is or it looks like, I don't want to say we know, but it looks like that it's in a decent accumulation range against Bitcoin. And this begs the question, right? Well, if it's in a decent accumulation range, then maybe it's a good time to DCA into the market. Obviously I can't say a short-term move. The short-term move could be that it retraces back down to $50, right? There's no free lunch, right? If you're going after a certain return, there's going to be a risk associated with it. The more volatile the asset, the higher the risk. So what we're looking at, right, is can Monero kind of break out of this accumulation range that it's been in since 2018, right? Since the end of 2018, we have been range bound here. And what we want to do, right, is we want to see it break out north, not really of $100. $100 would be okay, but I would like to see it break out north of 120 or even 130. So we want to see it go to 150 to 170. This is what we want to see. And if we see that and Bitcoin stays humdrum, then we're likely going to see the XMR Bitcoin ratio break out again. I do think there's a strong case for these original coins. Obviously, people get swept away in whatever the flavor of the day is, right? But I do think that some of these older coins are really going to kind of have their day again, right? And break out, and some of the flavor of the day stuff is going to get left behind, while some of these older coins are going to kind of reclaim some of that ground that they lost. So we'll see what happens. As I've said before, I reserve the right to be wrong. I could be completely wrong. And I don't consider myself to be wrong just if we retrace in the short term. What I'm looking for is sometime over the next few months, maybe 3 to 6 months, to not only see XMR break out against the USD, because of course this will likely happen if Bitcoin goes up, right? If Bitcoin goes up, then it's not hard that Monero would go up. What we want to see is XMR outpace Bitcoin in the next few months. This is what we want to see. So we'll check back in on Monero maybe in a few weeks, see how it's doing, see if we're still in the accumulation range or if we've broken out above it. So yeah, we'll follow it. Let me know what you guys think about it in the comments below. Make sure you subscribe to the channel if you like Monero and you wanna see more videos on Monero. And that'll go ahead and wrap it up. I'll see you guys. Oh, and also please check out the Telegram channel too if you want to talk about Monero. I'll see you guys next time. Bye.